That was so boring. What a boring Friday. Anyway, GME going into Monday with a little bit of negative arbitrage and liquidity tightening up into the end of the day slightly. We're still not really getting any shorting. We're not getting a lot of covering either. We got a little bit in the intraday, but not a ton. Variance is still leaning on the side of bullish, and we are moving up a bit, but not in the strongest way. I would have liked to see a much stronger bounce off of our low here than this kind of just consistent uptrend. However, it is fairly consistent. It's held its range pretty well, so not the worst. And there's still a lot of positioning around here for next week, so we should still have some support like 28, 25. We'll see what moved around today. I'll let you guys know over the weekend. SPX really just kind of not doing much today. Closing down 4 points, but realized vol still basically just nothing, right? Every day just opening where it closed and closing where it opened, which is super boring. But getting a realized vol down here is probably very important for short vol. Weird bear flag on ES. Did not get a full reversal, even with the bump at the end of the day. We just tested kind of that first leg down. So we could still fail this. This is not bullish consolidation by any means. But we'll see how this goes into next week. We do have SLD next week. We have a short week next week because of Juneteenth. So it's going to be kind of all over the place. We also have some fairly important data into the back half of next week with housing data coming in. That may have some effect on yields. Dollar's still very strong, but yields declining. So dollar holding above 105.50, right? Yeah, holding above 105.50 today. But the top end of the yield curve still falling off pretty hard. Commodities down on the day, but not very much. I think oil kind of slipped a little bit towards the end of the day, but metals are up again. Silver, copper, gold, starting to get some increased fears around those again with dollar rising. So keep an eye on that. Core 1 and 3 month actually turned around a little tiny bit today after reaching, all-time lows. So this might be the start of a little bit of breakdown in the dispersion trade as we move into OPEX. Also, don't forget we have VIX expiration next week as well. Really no change after the BOJ decision. Yield curve still uninverting a bit, and the forward demand for volatility, although it picked up this morning, back down to negative 13% by the end of the day. I don't think there's any news coming up anytime. Well, maybe the 20-year auction that will affect yields. Bond volatility pretty flat yesterday, so not the move up we were expecting, but still elevated compared to dispersion trading. Skew just rocketing. I don't know what the happened there today, but that's weird. So just no tail risk hedging whatsoever. This greatly increases. So the higher this goes, the greater probability percentage there is for a 2 to 3 sigma correction. That's an unusually large upside move. So we'll keep an eye on that. Or maybe a bunch of tail risk hedging pulled back. 37.57% of the S&P over its 20-day moving average. So still just no breath in this market, right? Today, not only were ES, YM, and Russell down, NASDAQ was somehow up 42 BPS. RSP down 64 points on the day, so that's the equal weight S&P index. And just, I imagine just a sea of red and then tech, you know. And then if you look at, NQ, it's just going to be all green, except for Tesla and Amazon, for the most part. Costco, like Google, Netflix, Adobe up 15% today again. AVGO up 3. Nvidia up 1.75, Costco up 1.15. So, and then everything else kind of gaining a little bit. But even here, there's quite a lot of red, right? Tesla down, Lynn down, consumer services not doing very well. Qualcomm, ASML, MU, Texas Instruments, all getting hit today. But, you know, really you just need Apple and Nvidia to hold everything up, I guess. And, yeah, Dow down quite a lot. I think, for, what was it, 40, yeah, 44 points. So still no breath. You know, all-time highs and no breath. Adobe carrying the day, apparently. We're ending the week with negative 23.58% correlation between VIX and cash VIX. This is about where we were yesterday. So really no change in volatility correlation today at all. Which probably means they're shorting vol just about as hard as it's breaking down. So maintaining positioning but not really turning around. Scalped a 240 today at SPX, 5425, 5400p. Green is green. Growing my small port. Thanks for the education. No problem, Lemur. Go hiss hiss. Congratulations, dude. One step at a time. Fed funds pricing in almost zero point 0.4 cuts now, so slight improvement there, despite the negative consumer sentiment and higher inflation expectations with the Michigan report. I'm guessing that the move up in Fed funds expectations is due to import costs dropping. Although I'm really not sure with everybody falling into a recession if we should be expecting import costs to rise very much. Maybe just less imports. Yeah, so that's where we're at. Thank you guys so much for tuning in. I'll have the members stream on Sunday at 12:30, which is open to everyone, but you can only comment on it if you're a member. And I'll see you guys there. I hope everybody enjoys their weekend. Later.